Good afternoon, guys. Today we are going to be going over the Costco earnings call. As you can see, I'm in the queue right now. It should be starting here in just about 20 minutes if I'm looking at it correctly. I'll go over the earnings report. I'll go over my thoughts right now. I should also get the price up here real quick before it gets too hectic. I was just looking at the price. It didn't move too much. It had a minor move. Yeah, it's still a minor move. Um, I'm not sure what it will do inside of the future here, but as we know, it is just kind of steady right now. So let me try to get it up here for you guys. There you go. All right, that should be good. Let me try to get it a little bit better though. That's good. All right, so we're gonna be looking at the Costco earnings call today. We're gonna be going over all the numbers I'm seeing here, all the big things we're seeing from these earnings reports. I'm seeing a lot of people are pretty bearish on this earnings report, mainly due to the fact that there was the issue that it's kind of been moving up a lot in the last couple months, and people are saying it's overvalued. But I am not seeing any reason to believe that, especially as we see the growth has been very good, and all the numbers are showing a lot of positives here. The only thing I'm looking for more so is to see more guidance from the company, which we haven't seen inside of the last couple months. But I think that the numbers here, if you look at them closely, I just took a look at the 8K as well, and I think the numbers are pretty good here. So I'll go over the main things real quick with you guys. So the first thing I want to bring out that are positive in these results are the growth in the sales and the earnings. Both of these were absolute killers. I mean, if we're looking at it from a standpoint from here, the growth was exceptional because they had mid-single digit net sales increase and a double-digit earnings per share growth, which is indicating that there's a very strong demand and that they have a lot of operating leverage inside of this marketplace. As we could see here, the report is showing the expectations as its sales rose 8.2% year over year, and not only this, the earnings per share beat on very high levels, and the revenue is still obviously a beat. So some of the main things I think was, where is it? The comparable sales. Um, Comparable sales. There we go. Comparable sales and industry metric that takes out the impact of one-time factors like store openings and closures increased 5.9% in the US and 6.4% across the globe. Digital sales jumped by 20% year over year. I think that this is one of the main things that has gone under the radar, and it's something that has very much so is suggesting that online and the omni-channel strategies are continuing to accelerate, and they're continuing to profit from these. As we see, the membership model is still very powerful, and a lot of people are making Costco kind of like their one-stop shop for everything they need, which I think will be crucial inside of the future, especially as they continue to build a healthy business. I think that the membership model is very good for a company like this because it's high margin. Obviously, there's very high margins. It rises significantly every year. The more members you have, the better it really becomes, and it supports the reoccurring cash flows and profit sustainability, which you need at a company which is generating, I mean, 67 billion in a quarter. This is very healthy cash flows, and it's something that I think a lot of people are looking to see. And I think the multiple is like 25 times, and I think it is very worthwhile because the stock has only performed well in the last couple months, and I think it will continue to in the future. As we could see, they have a lot of flexibility in the current position that they are in, just because of how much they have grown in and done it in a good manner, where they continue to invest inside the company and continue to grow the business at the core level. So some of the main concerns I'm seeing is that the stock has lagged some of the market gains, but I think, as I was saying, that is just due to them having such a high multiple, and there is also the tariff and stuff risk on the future. But the valuation, I think, is still at a very fair level, and there's no reason, in my opinion. Costco beating on both levels here is very bullish, and both revenue and earnings per share. It shows that they're continuing to build steady growth through the core warehouse sales. Not only this, I think that a crucial thing which I hope they bring up on the call is this digital sales jumped 20% year over year. This is a huge jump, especially for a company at this size. to see this type of growth still happening for a company generating 67 billion, I think it is massive. And obviously, we haven't seen the stock price move too much after hours. It is still sitting at just about 600, 879 here. But I think that if the strong fundamentals have already been kind of priced in, I think that the guidance we see on the earnings call will be crucial, which is why I'm streaming it, why I will be watching it. And I think that the business model is still very attractive. I mean, there's low price bulk retail, strong membership renewal rates, and expanding digital sales. This is a real key for success in my opinion. And obviously there are always going to be risks, especially in consumer goods, especially as we see the slower in comps in certain segments. But I think that the valuation is one of the only main things that I see people bringing up. And let's check what the PE ratio is right now. The PE ratio is about 49 times X on the PE. That is pretty crazy. It definitely is high, but you are also expecting it is going to be one of the biggest growing companies in the next coming decades. It will continue to grow in the future, and I think that this earnings was very crucial. I mean, as we've seen, the net sales are huge. I mean, if you think about a quarter, it really is just 12 weeks, and they've made $66 billion, and that's increasing year over year constantly, and the net income is increasing at a steady rate as well. The main thing I think that is also important to watch is how that they have $16 billion in cash, which is obviously going to be important for inventory reasons as well as just continuing to expand the business further. And I think that is a good steady moat to have as this company grows. Let me get one thing up here. I appreciate you guys hanging out with me. We're going to watch the call. It should be starting here in about 15 minutes. So I will obviously be watching it and all that good stuff. So let me get this here. And so one of the main things I am seeing is that the membership renewals is such a good business. I mean, I was talking about it a couple seconds ago. The renewal business is continuing to boost very strong membership renewal rates. I mean, 90% plus inside of key markets, especially inside the US and Canada, is, I think, a powerful signal of customer loyalty and reoccurring revenue, which is obviously the bread and butter for every stock. Every stock aims to have this type of reoccurring revenue that just continues to grow year over year, and I think it's going to be crucial. As well as we see they're rising, the membership fee costs are continuing to rise every quarter, which is something that I think a lot of people are happy to be seeing here, and I think it is a good indicator for the stock, especially as we know membership fees make up a large share of their operating profit, and fee income has been growing very quickly due to the fee increases and more executive upgrades. So because this revenue is very highly it has very high margins. It supports Costco in many different ways, and I think that's why the stock price is still at a not high enough level, because obviously the PE ratio is very high, but there's no other company really doing what they are doing inside of this market. Is kind of the main draw away I'm taking from everything I've been reading, everything I've seen. Not only this, but we want to bring out the thing that everyone's been kind of like sweeping under the rug with this earnings report. It hasn't moved much, but the comparable sales growth continues to grow in digitally enabled sales, especially e-commerce, has been double-digit increases. I mean, 20% plus is absolutely huge, and it suggests that Costco is capturing both in-warehouse traffic and online demand, which is obviously going to continue to broaden its reach and resilience in any type of economic downturn or anything, which I think is crucial for stocks to have. So not only this, I think they introduced a new tier in the Costco. They used to have the membership base, they had the executive tier, and with this we see analysts did expect Costco memberships to grow, with paid memberships increasing year over year and the executive memberships growing. But I think that this was one of the fastest it's grown in pretty much years, especially as we saw they also benefited from the membership fee increase. And this large membership count, especially in high fee like the executive tier, which I know a lot of companies use, a lot of different people use, it mainly means more revenue per member and a stronger lifetime value, which is obviously high margins, and it will continue to support the stock in the future. Some other things I want to point out is that there's the store expansion potential, because obviously it is mainly a domestic business currently. It's still mainly comprised in the United States, Canada, stuff like that. But as we've seen, Costco has been steadily opening new warehouses globally, especially in fast growing markets, and its long term site expansion pipeline supports future comp growths, which I think this physical expansion into different countries with their digital growth keeps Costco from being overly reliant on any single channel, and will continue to allow them to grow inside of the future. And as we've seen, they have a lot of durable value proposition inside of tough times. I mean, this is one of those business where you're gonna, even if there's a recession, let's say tomorrow the stocks wake up, they're down 40%. People are still going to need value oriented grocery shopping. It's still going to be something that across any income level, people are going to be looking at Costco. And even in inflationary environments where savings matter most, I think that this market positioning can allow Costco to gain market share even when this type of spending dips, which we may see inside of the future here. And I think it could be crucial to watch as Costco, it will continue to grow and continue to capture strong revenue despite it having already been growing so much year over year. I think it could continue to grow even during tough times economically, which is something crucial that I think a lot of people have not brought up inside of their arguments. I don't know what the music's playing. Oh, there you go. It's the classic. Let me turn it down a little bit. So the earnings call should be starting here in about 13 minutes, I'm pretty sure. I will have it ready. Once the call starts, I will mute myself. And I don't know if there's a presentation or any. I think there is a presentation. I'll find it. Wait, this might be the presentation. No, this is the AK. I'll find the presentation though, and we'll go through the presentation while they're on the call. I will not talk during the call though. So some other things I want to point out is that the analysts see the sales beat potential, and I think that before the earnings release, we saw that there was models and forecasts pointed to higher than expected revenue and earnings per share, which is what exactly came in today. And this is a good consensus, because when a company beats expectations despite already being increased, I think this guidance remains confident for investors, and I think it could continue to see growth in the near future. And as we could see, they've continued to add solid financial health with a conservative balance sheet. I was just looking at the balance sheet a couple minutes ago here, but the balance sheet shows low debt, efficient operations, and high revenue, which is obviously supporting continued investment without over leveraging into any one thing too much, which is going to be crucial in these next coming months. As we know, the economy has been pretty weird, but I think it's something to watch. This and with the amount of cash they have, I forgot what it was. It was like 16 billion, I'm pretty sure. This gives them a huge buffer to weather any type of pressure they have and any type of competition inside the market. So the membership model is one of the most crucial things on the market, and I think it's gone under the radar. Let me try to find this Costco earnings presentation. But yeah, I think I've gone over most of my points here. I will, if there's anything else anyone has any comments on or anything, or if anyone wants to drop anything here, I'd love to hear it. All right, there is a slideshow. So I will be going through the slideshow once the call starts, because I'm assuming they're gonna use it during the call. But other than that, let me go over a couple more things for a general overview for the people that just got here. I was just going over the earnings. I just gone over the numbers, the report here, and I think that for this earnings, they really delivered a strong and steady quarter, showing why it remains one of the most durable and high quality companies on the market. Especially as a retailer, they are one of the best on the market, and I think that's undeniably, because as we can see, the revenue has grown at a steady pace year over year. Not only this, but we also have seen earnings are moving sharply higher, and the membership income has continued to rise, which is the backbone of Costco's profitability. Even in a slower environment, as we see the economy's been kind of slowing down, consumers are still going to Costco's for their value, their savings, and trusting the brand which they have built for decades now. I think it's crucial. And everyone I know that has experience with Costco, it's only positive, which is something I want to point out as well. There was some. I was just looking at the comparable sales. Um, I hope it's here. There you go. Comparable sales, an industry metric that takes out impact of one-time factors, increased 5.9% in the U.S. and 6.4% across the globe. This is absolutely crucial because this online channel has quietly become of one of Costco's biggest growth drivers, and this quarter confirmed that trend. Traffic remains high both online and in store, which shows Costco is not only retaining customers but also expanding its reach over time. Not only this, but the membership renewal rates remain relatively strong. As we know, they've always continued to keep that as one of their strongest points. They're over 90%, and it's something that is just continuing to drive profits for the company, and it will, because these fees are almost pure profit for the company. They significantly lift Costco's margins, even if merchandise margins stay thin. And I think that executive memberships continue to grow as a percentage of total members, which boosts Costco's recurring revenue base even more. And I think it will be crucial to watch. As we know, financially, the company operates from a very strong position. And I think the cash flow was robust. The balance sheet remains clean, and Costco maintains flexibility to expand internationally, invest in logistics, or fund any type of dividend down the line. So store expansion is going to be the main thing I want to hear about on the call. I want to hear about global expansion on the call. It's the main thing I am most interested in hearing about personally. I think that there's a lot of room to grow, and as we know, this will remain active globally, setting up the future comp growth, which is another thing I was just talking about here. So the earnings call should be starting any minute now. I'll probably just chill out for a couple minutes, look at some charts and stuff. Let me check. How did Lululemon do today? I know they reported earnings here, so let me check. The stock is up 10% after hours. That's a big time jump. What about Broadcom? They were reporting also up 3%. Whole market's up. Costco's still pretty steady, but it's still early in the day. It's still early. We haven't heard the guidance. We haven't heard the call yet, so nothing to be worried about too much. Any minute now we'll be seeing here. And as we know, the market sentiment has just been mixed in general when it comes to Costco, because people have, since I started even investing, they've talked about how the PE ratio is too high for Costco, when in reality, due to the valuation concerns and the slower U.S. discretionary spending, I think that the operations are still performing very well, and Costco's model is kind of built for stability, predictability, and long-term sustainability as a stock, which is going to be crucial in the future, and I want to hear them bring that up on the call. And this quarter really reinforced that with the numbers we're seeing. I'm very how do I say it? I'm pretty bullish on the stock. Like, I obviously I think the margins are very good, and on the membership business, the main problem is obviously how far it's run up in the last 10 years. I think it's up like 700% over the last 10 years. But this is one of those companies. I was just talking about it earlier in the stream. Even when there's a recession, people are not going to be canceling their memberships inside of Costco, which is one thing that I think is going to be crucial in the future. And I think that they will continue to grow as we've seen. And I think that there's really no worry here. I think one of the main things is it's just that the valuation is already so high that they really have to post like Nvidia numbers to really increase the stock. So the stock isn't increasing currently, but I think we might see something with the guidance coming out here in the call. We might see something coming up anytime soon. So let me see this comment. Split / special dividend. I think this could be possible. The main reason I think that nothing has been kind of announced yet is that the Costco tends to announce special dividends only after clear earnings strength, and This earnings was very strong, obviously, but I don't think this was a strong enough earnings personally, especially with the way the economy is right now. And then in term of stock split, these are historically rare for this company, and management says not on the immediate agenda. But I think it's possible over the long term if the share price continues climbing inside of the future here. I think it will definitely be a possibility for a stock split. And I obviously, as we know, stock splits only increase the amount of retail attention we get, and the regular dividend, though, is continuing to grow. It is going on and is growing at a reliable benefit for long-term holders. So, hey, what's up, Jim? I'm going to be watching the Costco earnings. I think I just went over the numbers. Everything looks pretty good in my opinion. I'm just answering some questions, looking at the presentation here. I should probably adjust this a little bit. Once the call starts, I'll do that. But yeah, I'll mute for the call, guys, if anyone's here. You don't have to hear me the whole time. Once the call starts, I will mute myself. And we'll just listen to this, and then I'll give my thoughts at the end, pretty much, once the questions are over. But, yeah, I think that Costco's in a very strong position, and as we know, let me get excuse me, sorry guys. So as we know, Costco is in one of the strongest positions on the market because the membership model is pure profit. Costco's entire business is built around memberships, and membership fees are yearly, and those fees are almost 100% profit. This creates a predictable reoccurring income that keeps rising as more people join and upgrade to the higher tiers, and which is we've seen happening. Why would they do a stock split? One of the main reasons companies would do a stock split is just for retail, really. Like a company like AutoZone, I know it trades at like $4,000 a share, and yeah, $3,460 a share. And basically, the reason a company would do the stock split, I think, Costco would do it, is just to open the doors to more retail investors. It's hard for investors to fork up $900 for a single share, but if they do a 10-to-1 split, $90, it's just a different psychology. I don't know how to explain it. It just makes it easier. And yeah, I think a split is possible inside of the future. They haven't said anything definitive on it, but I think it might be coming here in the next earnings probably. And the customer loyalty is still one of the highest among retail in the US. Renewal rates are constantly above 90%. People who shop at Costco stay there for life because of the company in general and everything we've seen. So they still have strong traffic, strong revenue, everything. So I think that this is a strong earnings report. Obviously, the stock isn't up after hours as much as any investor would want if you're investing in this. But there's still a lot of potential, I think, here, especially as they grow into the digital and e-commerce business. This online business is growing double digits year over year, and it's basically click and collect, same day delivery, and e-commerce sales are going to become a big part of the pie in a couple years. And this diversification makes Costco less dependent on physical only traffic while straightening its brand as well. So I think we will see in the future more growth here. I think it's a weird time for the market, stocks, valuations, all that stuff. But I think that this is a good stock to be invested in, especially for if you want something that's more stable in terms of even if there's a recession, Costco will be doing fine. So this is a business built for decades and long-term growth and everything. I get it. Thank you. I appreciate you guys. Thank you as well for hanging out, listening to the call. It should be starting here in about a minute, I'm pretty sure, if I'm not mistaken. Obviously the music's nice, but I'd like to hear the CEO get on the mic here any second now. And then I will mute up and we'll go through this presentation real quick. But yeah, overall good. Overall, very good quarter. I don't know how much more I can really say. Obviously, the stock in the short term, I'm not really watching it. The earnings, we've seen stocks do horrible on earnings. They'll drop 10% on earnings, and then the next day they're up 20%. So I'm not too worried about the stock price right now. especially since it hasn't made really a definitive move. We might be seeing something during the earnings call here, especially once they hint at the guidance, what we're going to see here in the future. I think we may be able to see some type of higher growth here.
Ladies and gentlemen, thank you for standing by. My name is Abby, and I will be your conference operator today. At this time, I would like to welcome everyone to the Costco Wholesale Corporation First Quarter 2026 earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question-and-answer session. If you would like to ask a question during that time, simply press star followed by the number one on your telephone keypad. If you would like to withdraw your question, press star one a second time. Thank you. And I would now like to turn the conference over to Gary Millerchip, Chief Financial Officer. You may begin.
Good afternoon, everyone, and thank you for joining us for Costco's first quarter 2026 earnings call. I'd like to start by reminding you that these discussions will include forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These statements involve risks and uncertainties that may cause actual events, results, and/or performance to differ materially from those indicated by such statements. The risks and uncertainties include, but are not limited to, those outlined in today's call, as well as other risks identified from time to time in the company's public statements and reports filed with the SEC. Forward-looking statements speak only as of the date they are made, and the company does not undertake to update these statements, except as required by law. Comparable sales and comparable sales excluding impacts from changes in gasoline prices and foreign exchange are intended as supplemental information and are not a substitute for net sales presented in accordance with GAAP. Before we dive into our financial results, I'm delighted to say that Ron Bachrus is once again joining me for today's call. I'll now hand over to Ron for some opening comments.
Thank you, Gary, and good afternoon, everyone. Thank you for joining us today. I'll start with a few brief comments on some of our key growth initiatives before turning it back to Gary to discuss the results of the quarter. In Q1, we opened 8 new warehouses, including a relocation in Canada, our third warehouse in France, 4 net new U.S. locations, and 2 additional Canadian business centers. This brings our total warehouse count to 921 worldwide. We continue to see significant opportunities for future warehouse growth, both domestically and across the international markets in where we operate. While delays with a couple of our buildings in Spain resulted in us revising our planned net new openings for fiscal year 26 down to 28, we continue to plan for 30-plus net openings per year in future years. We've increased the size of our real estate team to support this goal, and without compromising on quality, we're being creative with real estate projects to further increase the potential for future growth. Recent examples of this include our new warehouse in Mulhouse, France, where we converted an old hypermart into a Costco warehouse, as well as 2 Canadian business centers that opened in the last month, both of which were refurbished home improvement warehouses. This approach broadens our options for market expansion and lowers the capital investment required. In addition to opening net new buildings, we will continue to relocate select high-volume warehouses to larger locations with more parking and expanded gas stations. By doing this, we're able to provide a better experience for our members and significantly accelerate sales growth in those markets. In fiscal year 26, we have 5 relocations planned, including 3 in the U.S. and 1 each in Canada and Taiwan. The success of our new warehouse expansion has allowed us to consistently drive top-line revenue well in excess of our comparable sales and gain significant market share. We continue to see improvements in the performance of our new buildings and a reduction in their time to maturity. With fiscal year 25 openings generating an annualized $192 million per warehouse of sales in the year of opening, that is up from $150 million for new warehouses opened just 2 years earlier. Turning to digital, our digital vision at Costco is to deliver a seamless experience that builds trust and loyalty with our members both in warehouse and online. We aim to make the shopping at Costco easier, faster, and more personal, no matter where or how our members choose to shop. This isn't about technology for technology's sake. It's about using technology to strengthen the fundamentals that makes Costco who we are, increasing member loyalty, driving top-line sales, and improving efficiency in our operations so that we can bring goods to market at the lowest possible price. Progress has already begun and is delivering tangible results. In the warehouse, implementation of scanning memberships at entry, the Costco digital wallet, and pre-scanning small to medium-sized baskets is leading to better member experience and improved productivity. The warehouses that have first to adopt this pre-scan technology have shown checkout speed improvements of up to 20%. And across our U.S. warehouses overall, we achieved record levels of checkout productivity in the final weeks of the quarter. Online, we continue to make enhancements to improve the member experience on our site and app. As an example, this quarter we launched new personalization capabilities that provide members with more relevant product recommendations based on their past search history. The sales lift from this enhancement has been very positive. AI is also being interwoven into our business where we believe it can strengthen our model. Again, we're approaching it in a very Costco way, practical, member-focused, and grounded in tangible business value. An early use case has involved integrating AI into our pharmacy inventory system. This system now compares prescription drug pricing across vendors and autonomously and predictively reorders inventory, improving our in-stocks to more than 98%. This change has played an important role in helping us achieve mid-teen growth in pharmacy scripts filled and has improved margins while lowering prices to our members. We're now in the process of deploying AI tools in our gas business, which we expect will improve inventory management and drive incremental sales by ensuring we're always delivering the best value to our members. These are just a few of the use cases we're developing into our business as we speak. While digital and technology will play an important role in our future, our people are what makes Costco special. I'd like to recognize the outstanding work done by our more than 340,000 employees around the world. Their commitment to our company and the Costco experience for our members is what drives our success. I'd like to thank our entire team for their outstanding work this year, and especially now during our busiest season. I also wanted to mention that our annual update to Costco's sustainability commitments was made available online earlier this month. This report provides a comprehensive review of the progress we're making towards our sustainability objectives, and I would encourage you to take a look. With that, I'll turn it back over to Gary to discuss the results for the quarter, and I'll jump back on during Q&A to field some questions.
Thanks, Ron. In today's press release, we reported operating results for the first quarter of fiscal year 2026, the 12 weeks ended November 23rd. As usual, we published a slide deck under Events and Presentations on our investor website with supplemental information to support today's press release. Net income for the first quarter came in at $2.001 billion, or $4.50 per diluted share, up from $1.798 billion, or $4.04 per diluted share in the first quarter last year. This year's results include a tax benefit of $72 million, or 16 cents per diluted share, relating to stock-based compensation, and last year's results include a tax benefit of $100 million, or 22 cents per diluted share, also related to stock-based compensation. Excluding these discrete tax items, net income and earnings per diluted share both grew 13.6%. Net sales for the first quarter were $65.98 billion, an increase of 8.2% from $60.99 billion in the first quarter last year. Comparable sales were 6.4%, both before and after adjusting for gas price deflation and FX. Excluding gas sales entirely and adjusting for the impact of foreign exchange, comparable sales were 7.1%. Digitally enabled comparable sales were 20.5%, both with and without adjusting for FX. Our segment breakout of comparable sales is disclosed in both our earnings release and the supplemental slide deck. In terms of Q1 comp sales metrics, FX positively impacted sales by approximately 0.1%, while gas price deflation negatively impacted sales by approximately 0.1%. Traffic or shopping frequency increased 3.1% worldwide, and our average transaction or ticket was up 3.2% worldwide, both with and without the impacts of gas price deflation and FX. Moving down the income statement to membership fee income. We reported membership fee income of $1.329 billion, an increase of $163 million or 14% year over year. Adjusting for FX, the increase was also 14%. Last September's US and Canada membership fee increase accounted for a little less than half of membership income growth. Excluding the membership fee increase and FX, membership income grew 7.3% year over year. This was driven by continued growth in our membership base and increased upgrades from Gold Star to Executive membership. At Q1 end, we had 39.7 million paid Executive memberships, up 9.1% versus last year. We ended the quarter with 81.4 million total paid members, up 5.2% versus last year, and 145.9 million cardholders, up 5.1% year over year. In terms of renewal rates, at Q1 end, our US and Canada renewal rate was 92.2%, and the worldwide rate came in at 89.7%, both down 10 basis points from last quarter. This slight decline was due to the factors we discussed last quarter and reflects new online members growing as a percentage of our total base and renewing at a slightly lower rate than warehouse signups. The decline was less than anticipated due to some early success with targeted communications to expiring members. Our goal is to continue to improve renewal rates by improving engagement with members who signed up digitally. Although for the reasons previously shared, we may still see a slight decline in the overall renewal rate over the next few quarters. Turning to gross margin, our reported rate was higher year over year by 4 basis points, both with and without gas deflation, coming in at 11.32% compared to 11.28% last year. Core was flat. In terms of core margins on their own sales, our core-on-core margins were higher by 30 basis points. This increase was broad-based, with non-foods, foods and sundries, and fresh all higher year over year. Supply chain improvements and an increase in KS penetration benefited margins, as did additional marketing revenue. The improvement in core-on-core was offset by changes in mix and lapping higher income in our co-brand credit card program a year ago. Ancillary and other businesses' gross margin was higher by 7 basis points, primarily driven by pharmacy and hearing aids. LIFO negatively impacted the gross margin rate by 3 basis points. We had a $1.9 million LIFO credit in Q1 this year compared to a $19 million credit in Q1 last year. Moving on to SG&A, our reported SG&A rate was higher or worse year over year by 1 basis point, coming in at 9.6% compared to last year's 9.59%. The operations component of SG&A was higher or worse by 1 basis point. Our operators did a great job improving productivity and capturing efficiency benefits from the technology investments that Ron referenced earlier. These productivity improvements fully offset wage investments and the impact of extended operating hours, and would have created positive leverage in the quarter had we not experienced higher healthcare costs. Central was lower or better by 3 basis points. This quarter's SG&A also included a charge relating to a tax assessment for prior years, which negatively impacted the rate by 4 basis points. Below the operating income line, interest expense was $35 million versus $37 million last year. Interest income was $122 million versus $96 million last year, driven by higher cash balances, and FX and other was a $33 million benefit versus a $51 million benefit last year due to lower FX gains. In terms of income taxes, our tax rate in Q1 was 22.5% compared to 22% in Q1 last year. As mentioned earlier, this year's rate benefited $72 million and last year's rate benefited $100 million from annual RSU vestings. Turning now to some key items of note in the quarter. Capital expenditure in Q1 was approximately $1.53 billion. As shared last quarter, we are making additional investments to support a higher number of new warehouse openings, increased warehouse remodels to drive continued growth in existing high-volume buildings, depot network expansion, and digital. We estimate capital expenditure for the full year will be approximately $6.5 billion. Before we take a closer look at core merchandising results for Q1, here are a few fun facts about the holiday selling season so far. Our U.S. food court set a daily record on Halloween, selling 358,000 whole pizzas, an increase of 31% versus last year. Black Friday was a record-breaking day for our U.S. e-commerce business, generating over $250 million in non-food orders. Our U.S. bakeries also set a record in the 3 days leading up to Thanksgiving, selling 4.5 million pies. That's over 7,000 pies per warehouse over a 3-day period. Turning to Q1 merchandising highlights, our relentless focus on quality, value, and newness continued to deliver market share gains across virtually all departments. Fresh sales were up mid to high single digits, led by double-digit growth in meat. We saw strong growth in higher cost cuts of beef and even greater unit growth in lower cost proteins like ground beef and poultry. Bakery experienced high single-digit growth, driven by the introduction of some great new items, such as our holiday dessert bars and our creme brulee bar cake. Non-foods had comp sales in the mid-single digits. Our buyers continue to do an excellent job finding new and exciting items at great values, while also adjusting our assortment to minimize the impact of tariffs. Gold and jewelry, special events, health and beauty were all up double digits, and majors, tires, and small appliances also continue to outperform with high single-digit comps. We added a number of new national brand partnerships across a range of non-food categories in Q1, including Gap and Ulta gift cards, Vera Bradley apparel, and Upper Deck trading cards. Food and sundries comps also grew mid-single digits, with candy and food showing the strongest results. Newness has been driving growth in this category as well, with on-trend items such as Dubai chocolate performing very well. Kirkland's Signature continues to grow at a faster pace than overall sales, with KS items typically offering 15 to 20% value compared to the national brand alternative with equal or better quality. In Q1, we launched approximately 45 new KS items, including dry facial daily clean towels, caramelized blueberry croissants, and various apparel items, in addition to our latest food court offering, the Caramel Brownie Sundae. As always, our goal is to be the first to lower prices where we see opportunities to do so. A few examples of lower prices this quarter include KS chicken pot pie from $4.29 to $3.99 per pound, KS bacon from $18.99 to $16.99 per packet, KS whipped cream 3-pack from $10.49 to $8.99, and KS walnuts 3-pound pack from $14.49 to $12.99. In digital, site traffic in the quarter was up 24%, and app traffic was up 48%. Sales in non-foods were led by pharmacy, gold and jewelry, tires, small electrics, apparel, and majors, all of which grew double digits year over year. Our same-day delivery service, offered in partnership with Instacart in the US and Uber Eats and DoorDash internationally, also performed extremely well, growing at a faster pace than our overall digital sales. Strong traffic and sales growth in digital were aided by continued web and app improvements, as well as the introduction of more personalized member communications. We continue to see many opportunities to enhance digital engagement with our members and look forward to sharing progress on future earnings calls. Within ancillary businesses, pharmacy, food court, hearing aids, and optical departments all had strong quarters. Gas comps were low single digits. Gas prices remained slightly deflationary in the quarter, but this was offset by volume growth. Costco Travel is another way in which we deliver unique membership value, and these services continue to resonate well with our members. Our member-only rates for vacation packages, hotels, cruises, and rental cars often lead to hundreds or even thousands of dollars in savings, in addition to the great service provided by our fantastic Costco Travel agents. Costco Travel US set an all-time daily sales record on Cyber Monday before beating that record a day later on December the 2nd. In all, we achieved over $100 million in gross bookings in the US through Costco Travel in the 5 days following Thanksgiving, up 12% from last year. Turning to inflation. Overall, inflation remained relatively consistent with recent quarters. Fresh and food and sundries saw higher inflation in commodities such as beef, seafood, and coffee, but this was offset by lower inflation in eggs, cheese, butter, and produce. In non-foods, we saw low single-digit inflation for the third consecutive quarter, primarily driven by gold and imported goods. Our buyers continue to do a great job reducing the impact of tariffs for our members. The strategies being deployed to achieve this include changing the country of production for some items, sourcing more items produced in the US, consolidating buying efforts globally to lower the cost of goods across all our markets, and leaning into Kirkland Signature, where we have more control over the supply chain. Additionally, we are changing our item assortment where appropriate. As discussed last quarter, while we have a robust and exciting holiday merchandise selection in our US warehouses, this represents a lower number of SKUs than in prior years. In replacement of some tariff-impacted items, our buyers have sourced a number of alternative great value items, including seasonal food, health and beauty, and live goods. In many cases, these items are produced in the US and are largely unimpacted by tariffs. The supply chain has remained stable, and our merchants feel very good about our inventory position. By optimizing our inventory flow and reducing some of the higher inventory levels we built up a year ago in the face of greater supply chain uncertainty at that time, we've been able to improve working capital and lower the labor required to manage inventory without impacting in-stocks or sales. Finally, in terms of upcoming releases, we will announce our December sales results for the 5 weeks ending Sunday, January the 4th, on Wednesday, January the 7th, after market close. That concludes our prepared remarks, and we'll now open the line up for questions.
Thank you. And we'll now begin the question and answer session. If you have dialed in and would like to ask a question, please press star 1 on your telephone keypad to raise your hand and join the queue. If you would like to withdraw your question, press star 1 a second time. If you are called upon to ask your question and are listening via speakerphone on your device, please pick up your handset and ensure that your phone is not on mute when asking your question. To be able to take as many questions as possible, we ask that you please limit yourself to 1 question. Again, it is star 1 to join the queue. And our first question comes from the line of Michael Lasser with UBS. Your line is open.
Good evening. Thank you so much for taking my question. Ron, one of the observations that the market has is under your tenure, Costco's had a greater willingness to move with speed, embrace technology and the different modes of retail, and change a bit more than in the past. Is that a fair conclusion? And given the benefits of these actions that you're taking, which is greater productivity and efficiency, would you be willing to continue to let the financial benefits fall to the bottom line, or do you see a greater need to reinvest back in the business in areas like price to continue to drive the top line? Thank you very much.
You're welcome, Michael. Technology and bringing the company along has been a focus for several years. We've had to spend a couple of years ago. We really focused on our fundamental base systems and our core systems behind the scenes that will allow us to build for the future. And so we're now coming to a fruition where we're starting to see the benefits of that hard work, of all the backroom systems that we had to build that are now coming to light and coming to the front face for our members. We feel that technology is going to be a big part of our future. I think it's equally as important as all of our other initiatives that we have out there, but we will never succumb to not being the best price and driving prices down for our members. That's what Costco is known for, and that will always be our leading mantra.
And our next question comes from the line of Christopher Horvers with JP Morgan. Your line is open.
Thanks. Good evening, guys. So a quick follow-up on the latter and then the former question and then a second question. So as you think about results recently, they're strong in absolute standards. I think the market holds you to very high standards. Is there any concern that you see on the traffic side where there's more of an impetus to invest in price? And then secondly, it looks like executive members per week grew at an accelerated pace from 4Q to 1Q. How are you looking at that in terms of the overall benefit of extending the hours, both in terms of the lift that you're seeing in sales, and is this also driving accelerated signups? Thanks very much.
Yeah, thanks for the questions, Chris. First of all, I guess on your point around sales and overall sort of membership growth in the business, I think from our perspective, we look at it very much over the last really 6 to 12 months. And when we look at the sort of trends and step back from what we're seeing with the member, there's a lot of consistency. Actually, overall, I think we've shared on the last couple of quarters, when we talk about what members are looking for, they're looking for value and for quality and for newness. And I think we've done a great job, our buyers and operators done a great job of bringing that to our members. And when you look at month by month, there's definitely been some lumpiness in the individual monthly sales results that we've posted. But a lot of that has been to do with whether it was uncertainty around tariffs one month to another or port strikes that we had to cycle. And if you sort of take a step back and look at the last 7 months that we've reported and the last 2 quarters, our average sales have been around that 6.5% growth. We had 6.4% comps adjusted for gas and FX in Q4. We had 6.4 Q1 this quarter. And actually, if you look at every individual month, there was only 2 months in that last 7 months that were outside of the range of 6 to 7%. So I think sometimes there's a bit of fixation on individual month or one particular point of data. But actually, when we look at what we're seeing with the overall sort of patterns of how members are shopping and how they're behaving, we've seen a very sort of consistent pattern and a consistency in the results. So our goal is to really continue to make sure we're delivering on that value, quality, and newness, and ensure that we continue to see that growth in membership count and in their frequency of visiting and in the items that they're putting in the basket. And generally, when you look across whether it's non-foods, food and sundries, and fresh, we've seen consistency in performance in growing market share in those areas. So we'll continue to focus on making sure we're delivering on that value, but feel good about the overall sort of consistency in the results that we've been seeing. I think the second part of your question maybe was around executive membership. And I think we've been very pleased with the membership response to the extended operating hours. And also, you may remember we added $10 per month as an extra benefit for executive members who shop on Instacart. The extended opening hours that we did was certainly a major benefit for our executive members, having an extra hour in the morning on most days to shop the warehouse. But we also added an extra hour on a Saturday evening for all of our members. And if you think about the earlier hours, it often extends the total shopping members in the warehouse. So it spreads out the traffic, if you like, to make the experience better for all our members. So we felt very positive about the change that we've seen. It's certainly been well received by members. We've seen a really nice uptick in executive upgrades, to your point. And, it gets harder to track the spend uplift because of the further away from the change you go. It's more difficult to sort of parse the differences that are happening in the impact on sales. But we still think that sort of 1% lift was a reasonable kind of view of what we think the impact was. And of course, as I mentioned earlier, you see sort of different puts and takes that I would sort of, if I look at our overall sort of sales trends, I think I look at it as it's probably offset some of that cycling of gift cards and gold that we were expecting at this time of year. And we've been able to maintain that overall sales growth even with those impacts.
Thank you very much.
And our next question comes from the line of Simeon Gutman with Morgan Stanley. Your line is open.
Hey, Ron. Hey, Gary. My question is on, how you doing? Warehouse openings in the U.S. I think we're going to get to the highest number, something like 20 years next year. So do you do anything different from a membership perspective? I know we're lapping some of the short-term promotions that you did on membership. Is there anything you do different as you approach next year?
No, I don't think so. Next year's openings will be a good mix of some infills in established markets, and we still have some opportunities in some new markets. And so, several of the infill locations don't result in a whole lot of signups, but really drive a lot of top-line sales because it really addresses the frequency aspect of things. And then the new markets, we've done several of those this year, and we have a few more slated for next year, of markets that we may have been a little reluctant to go into. We've got much greater confidence at this point, and we'll garner a much better new sign-up approach in those markets as well. So a lot of, continuing on with what we've done before, but some different type of scenarios as we move forward in the U.S.
And our next question comes from the line of Oliver Chen with TD Cowen. Your line is open.
Hi, thanks, Ron and Gary. On the technology side, it's been really exciting. As we think about retail media, there are plenty of companies that really want to work with you deeply on digital advertising. Would love your thoughts there, and also as you approach the marketplace in a customer-centric way. Be love to have your thoughts on that development. And finally, AI and gas. AI has so many applications across the customer experience as well as employees and inventory management. What's on your roadmap for how that will innovate your business going forward? Thank you.
Thanks for the questions, Oliver. Yeah, I'll take the retail media question first. Yeah, we've talked about retail media a few times now on the calls, and I definitely believe that it's a meaningful opportunity for us. I always like to start the conversation on retail media, though, to remind everybody that we have a pretty large, alternative profit business that many other retailers would define that way today. And I called out a couple of them on the call today. Outside of financial services, we have a large travel business. We have a traditional sort of media revenue business that we generate meaningful dollars today. And both of those were actually travel and the sort of marketing and media revenue were tailwinds to our business in the quarter. So there's a number of strengths that we have today in that space that are part of our model that I think showed through in the ability to keep investing in the member and still expanding our operating margins during the quarter. That being said, we think of retail media as a slightly different opportunity from those because it really is about tapping into that marketing spend that many of our suppliers are investing in other places to drive their marketing awareness and drive return on ad spend. We are in the early innings, I would still say, of retail media. We've been building out, as Ron alluded to earlier, the sort of data and tech platform that allows us to execute personalization at scale. And I think for us, the first priority with personalization is to deliver a better member experience, is to deliver more targeted, relevant messaging so we drive more items in the basket, more visits to the warehouse, more visits online. And as you do those things, it just creates an even more compelling value proposition for our media partners. While we're building and executing on that capability, we've been introducing some media activity on third-party sites. So think of that as being, you may have seen, you have the Costco Auto program that will run on digital TV. And we've done some targeted MVM amplification campaigns with some of our CPG partners that have been very successful as well. We also recently launched advertising on our gas pumps as a new channel for us as well around new media opportunities. So I think the headlines would be we're seeing some early success, but it's still very much an opportunity in the future on the roadmap for us. And a bit like Ron mentioned earlier, as all of our focus is on how do we drive more value for the member. So as you might expect, the vast majority of the value we create here will reinvest in the member to drive down prices and value and increase sales. And we actually think that's a real advantage with the national brand partners that we work with on media because they know that we're committed to really driving the flywheel and driving growth in their overall business.
And on the AI front, we're extremely excited about what the future holds for us. I mean, we see many opportunities that are really business-driven and tangible, have great tangible business value for us. And you look at things like our procurement system as we are a global retailer and we buy from around the world, as well as supply chain, what it can do there. And just the tools that we've seen that this has improved our employees' work abilities and their skill sets as well as they do their day-to-day work. So we see a lot of value. We're very excited about the journey. We look at it in a two-phase approach that concurrently we're going to be focusing on member-facing. How do we improve the experience for the member through AI? And then business in basics. How do we continue to focus on the business basics? Our mantra is bring goods to market at the lowest possible price. And we think AI has a great asset to that, and it really can help us become a much better merchant out there.
Best regards. Happy holidays.
Thank you.
Thank you.
And our next question comes from the line of Chuck Grom with Gordon Haskett. Your line is open.
Hi, Gary. Hi, Ron. Nice quarter.
Hi, Chuck.
In your annual report, your sales waterfall chart is impressive. The class of 25, 192 million in sales versus 150 million in 2023. Can you help us think about the opportunity to continue to expand on this front and the steps you're taking to continue to improve productivity within the store?
We see a good horizon on expansion. We continue the creativity. I mentioned just a couple of examples of things that we're doing differently. We've got a project in Los Angeles where we're working with some developers that there's some affordable housing going above Costco, just north of LAX. That project will open up in 2027. That would be a market that it's Baldwin Hills is where it's called. That would be a market we would never be able to go into and find 25 acres to build a Costco. It just wouldn't happen. So we're finding creative ways to get closer to our members and to relieve some pressure from some of our highest volume locations. And again, like I said, we continue to see some opportunities in markets that we would have questioned in the past due to maybe some competition is there, but we feel much stronger as going in and attacking these markets. So, like I said in the early opening remarks, good runway for 30 plus locations as we look forward for the next few years for sure. And a good combination of both type of openings. And international still presents some very good strengths for us. In our recent Sweden opening, our second location in Sweden, our third in France, and we've got quite a few in Asia that are upcoming as well. So we feel really strong about our future expansion.
And Chuck, I think on the point on the growth per warehouse, I think Ron's final point there is a really important one around the balance that we're able to get. So we find with many of the US and Canada warehouses where we're filling in, we can accelerate the sales very quickly because Costco is known. We're sort of filling capacity where maybe there's some very busy warehouses around. So it really helps the economic model with getting returns from the quick acceleration in sales growth. And then in the international markets or places where we have less penetration of warehouses, it really drives a significant increase in new member count. So it's nice to have a balance between those two. The returns look a little bit different in how you get there, but they both generate strong return on investment in different ways, and they create a nice balance in the business overall as we grow.
Great. Thanks.
And our next question comes from the line of Kate McShane with Goldman Sachs. Your line is open.
Hi, good afternoon. Thanks for taking our question. The renewal rate softness sounded better than what you expected. Could you maybe talk to some of the things you did to try and offset the softness from the more digital members?
Sure. Yeah, you're exactly right. When we talked about the membership renewal rate last quarter, we shared that as a result of this change in mix around us adding more new digitally engaged members or signing up digitally to become a Costco member, what we've always seen with that group is that they're generally a bit younger and generally speaking, they renew at a slightly lower rate. That's always been true, but there's a bigger number of them now coming into the base. So as they flow into the math model, it's impacting the overall renewal rate. And so I think you may have heard us talk last quarter. We said we think of while that's sort of a mathematical fact, we think there are opportunities for us to be able to change that outcome by delivering more targeted and relevant communication to those members that have signed up digitally and are reaching that point in maturity where they're considering whether to renew or not to renew their membership with us. And so our membership team is really focused on delivering targeted, relevant messaging. It's to engage those members, to ensure they continue to see the value of the membership and really helping them see why there's significant value for them to continue to be members. And what you saw in this quarter was really some of the early work the team's done to engage those members and improve the renewal rate. And obviously it's early days, so we want to make sure that we can continue to build that momentum, but it's been encouraging to see the impact of those changes. And we were expecting, based on purely flowing through the sort of the renewal rate that we'd seen before, to see a slightly higher decline in the quarter, and we were able to offset a part of that with the changes that we made in communicating with members.
Thank you.
And our next question comes from the line of Peter Benedict with Baird. Your line is open.
Oh, hey guys, thanks for taking the question. I want to ask about digital. Maybe if there's any metrics you guys can share with the success you're having, maybe what percentage of the membership that's engaging with you digitally now versus before. I don't think I may have missed it, but any stats around Costco logistics, how you're doing with delivery there. Thank you.
Sure. Thanks for the question, Peter. Yeah, we haven't typically talked about the percentage of members that are engaging with digitally. It does continue to grow, as you might imagine, as we're continuing to make enhancements to the website, to the app, and really as we're delivering more relevancy to members through those channels. And so we are continuing to see growth. We did share in the prepared remarks that traffic was up 24% during the quarter on the website, and it was up even higher than that in the 40% plus range on the app during the quarter. So we continue to be pleased with the momentum that we're seeing in digital engagement with our members, and our expectation would be that digital sales, as we define it, would continue to grow at a faster pace over the longer term than our average sales overall, as more members engage digitally, and we're able to use some of those targeted, personalized communication tools to really help members see the relevancy of all the offers that we have online, but also to use those channels to help drive higher engagement into the warehouse as well, and really creating a seamless experience across the channels.
Very excited about what we have coming in the app. I mean, more engagement, more locking in the brick and mortar business with the virtual digital business as well. And as we continue to roll out enhancements, we've got pay ahead for the pharmacy coming. We've got ordering cakes and deli trays online coming. So many of the things that we've heard from our members that could be a little bit clunky are now moving to a digital state, and we're seeing great adoption right out of the chute. So we see some upside to the continued growth and the digital value of having the app and using the digital membership card, the Costco wallet. Those things have all got a very nice roadmap the next 12 months, and we see that number is going to hopefully continue to outpace the growth of the warehouse.
Thank you.
And our next question comes from the line of John Heinbockel with Guggenheim. Your line is open.
So, hey guys, so two real estate questions. A lot of opportunity internationally. What does the pipeline look like, both in some of your European countries and Asia? I know it takes a while. And then secondly, you mentioned remodels, which I don't think you haven't talked about too much. What is the remodel philosophy in the U.S.? How many do you do? What's the extent of that? What's the lift? I don't know how impactful that is. Thank you.
Do you want to? I can start. A good runway internationally. We see some good growth in Europe, especially in Spain and the UK. We have got a lot of good things going on there, and we see that those two countries will be ramping up. We continue to see very, very good strength in Asia, and so that market, we see the next 5 years, we think that those projects do, like you mentioned, do take a little bit longer, but they're going to start coming to fruition, so we'll see a good balance. We've been about 50-50, half of the expansion in the U.S. and half outside of the U.S., and now we're seeing even more opportunities in Canada and North America and Mexico. So a good balance. About half of the 30 should be outside the U.S. we see in the next 5 years. Expansions and relocations, we normally do about 5 to 6 relocations a year. The uplift is dramatic. When we do these, we normally are moving a building that is underserving the market and goes into a larger facility, better parking. If we have a gas station, expanded gas, or we add gas to it, and a wide variety of uptake to extreme 50-60% increases when you add a gas station and really add a lot of parking, to 20% uplift to a building that had everything, just got into a better facility. So we strategically look at that. And then we are continuously investing in our current warehouses too, to make sure that we're updating the fresh foods areas, we're bringing the new ancillary businesses in there. So it's a process we go through every year of planning ahead, and we look out several years, and a good combination of all three: new locations, relocations, and taking care of the existing buildings that we're doing business in as well.
Thank you.
And our next question comes from the line of Rupesh Parikh with Oppenheimer. Your line is open.
Good afternoon, and thanks for taking my questions. So I just want to go back to the comments on SG&A leverage. So it sounds like this quarter higher healthcare costs prevented your team from leveraging costs. So just curious about the dynamics there. And then as you think about productivity, just how do you think about the runway there? It sounds like it could continue for a few more quarters. Thank you.
Yeah, thanks for the question, Rupesh. Yes, you've summarized it pretty well, actually, from how we looked at the quarter. If I just take a step back, there were kind of 4 main sort of headwinds or investments, if you like, that we had during the quarter when you think about the impact on the warehouses. The first, of course, is the investments that we make through our employee agreement each year. So that was the March 25 agreement, and that on an incremental basis was sort of mid-single digits headwind that the team had to kind of overcome in improving productivity. The second was, of course, the extended operating hours that we implemented in June. And then you mentioned it, that we had higher healthcare costs in the quarter. We've generally seen, of course, healthcare costs increasing. This was perhaps the first quarter where we've seen healthcare costs grow at a faster pace than our sales. So we saw a little bit of a headwind overall from healthcare costs in the quarter. And then we also had the 4 basis point impact from the tax charge that relates back to multiple years ago that we took during the quarter as well. So overall, we were 1 basis point negative on productivity. If we'd have not had the sort of sales and use tax charge that we had during the quarter, and without the healthcare costs, we'd have been sort of a mid-single digit or so positive leverage during the quarter without those sort of factors. Now, I would say as you look forward, we're still going to have, of course, the continued investment that we've already implemented around wages. So we have to continue to support those costs. We've implemented the extended opening hours. We think the operators done a great job of absorbing that, as you've seen the last couple of quarters. The healthcare costs, that's something we're taking action to make sure that we're comfortable with the trends that we're seeing. But of course, there's possibilities those costs could continue to be higher in the future. We wouldn't expect to have the sort of the 4 basis point impact that we had from tax. So I think when you take all those things and look at it going forward, we've historically said that we need to get to about mid-single digit sales to be able to leverage SG&A. And I think with the work the team's done to offset extended operating hours, the work the team's done to offset the employee agreement, I think we're in that kind of ballpark. And actually in the first quarter, had we not have had the adjustment for sales tax, I think we'd have actually seen some leverage during the quarter. So I think that's the way to sort of think about it overall.
Great, thank you. Sorry.
Thank you.
And our next question comes from the line of Greg Melich with Evercore ISI. Your line is open.
Hi, thanks. Gary, I think you mentioned that inflation was running similar. I just wanted to make sure I got the numbers right. It was up low single digits in general merchandise. Was food inflationary or not in the quarter? And how do you see that trending?
Yeah, food and sundries and fresh, Greg, would have been slightly inflation. So low to mid single digits. No real change really from last quarter. There are quite a few puts and takes in there, as I mentioned in the prepared comments, that you've got a few of the commodities that would be inflationary right now when you look at items like beef and seafood and coffee. But then you've got produce, which is deflationary currently, and there are other items like eggs and cheese, which are still inflationary year over year, but at lower inflation than they were earlier in the year. So you've got kind of puts and takes that are offsetting each other, which really essentially sort of levels it all out at the same level as it was the last couple of quarters.
Would it be fair to say that most of the ticket growth in comp was driven by inflation?
I think there'd be a combination of both in there. We'd have, and I remember for us, there's inflation for us, the way we measure it it could be the members buying a bigger pack size, or it could be the members buying an upgraded item of a new electronic or appliance. So I think you kind of have to look at it. There's sort of probably there is a combination of some level of natural inflation on like-for-like items, some level of inflation of members buying bigger pack sizes and increasing, moving to the newer model, if you like, and then some level of unit growth as well in there.
Got it. That's great. Good luck and have a great holiday.
Thank you. You too.
And our next question comes from the line of Edward Kelly with Wells Fargo. Your line is open.
Yeah, hi. Good afternoon, Ron and Gary. I wanted to dig into total paid members. You've had remarkable growth over the last few years. Models obviously resonated, and 5% this quarter is still very good, but it has slowed a little over the last few quarters. I was wondering if you could just maybe discuss what you're seeing there. Is that more so in the U.S.? And then have you seen any stabilization in that? I think the math would kind of suggest that maybe exit rate lower than 5.2. So just thoughts there. Thank you.
Yeah, thanks, Ed. Yeah, membership, as you mentioned, in general, we've been really pleased with the results that we've seen in the quarter with the new members and the younger population that we're recruiting, the acceleration in upgrades and overall growth that you mentioned, just over 5% and exec up 9%. So we're pleased with the results that we've seen overall. I think your point's accurate that if you look at the the year-over-year growth. It has slowed a little bit from where it's been over the last couple of years. And I think some of that's still starting to cycle some strong growth in the last year or so. But we still feel really good about the health of the membership growth. And we think there's a lot of continued opportunities to maintain that growth in the future. I know Ron mentioned a few of them in one of the questions we answered earlier, but partly with the existing warehouses that I think we're in a good position where every year we've been opening 20 to 30 warehouses, and we can see the maturity curve of the increase in the number of members that sign up as warehouses mature. We're obviously opening new warehouses each year, and in particular, to your point, in international, we tend to see a much higher number of new member signups, and as that mix continues to blend out to sort of closer to 50-50 between international and the US. We do think with the actions that we're taking, as I mentioned also earlier on the call around improving renewal rates, there's an opportunity to help that trend as well. And then, we're committed to continuing to improve the value of the membership. We've made obviously some major changes recently with the extended opening hours and the Instacart benefits and 5% gas on the credit card, but we'll continue to look for ways to add greater membership value. So I think it's accurate to say that it's a little bit slower than it has been, but we feel good about the momentum and the opportunity to continue to grow.
Thank you.
Thanks, Ed.
And our next question comes from the line of Zihan Ma with Bernstein. Your line is open.
Hi, thank you for taking my question. So on the non-food side of things, I think your comp, it's now in the mid-single digit percentage range. Can you just update us on when you expect to unlap the tough comps from the gift card sales? And does that timing coincide with the tax refunds or the incremental ones that consumers are going to get, especially middle to higher income consumers early next year? Will you start to see some more outsized benefit in that category? Thank you.
Yeah, I think in overall, obviously, we generally don't provide sort of comments on forward-looking what we would expect. I think what we would say around non-foods is that the team's done a great job of continuing to deliver exciting items at great value and quality. And we see while we have, I think your comment is accurate, that the growth year over year has come down to low double digits into that mid-single digit range. And I think you've heard us mention before, and you referenced it, that some of that really is starting to cycle the impact of gold being sold in warehouse and online, and also some of the gift card programs that we had last year. But overall, we still see good market share gains in really pretty much all of the non-food categories. And we saw, you may have heard us mention in the prepared comments that gold and jewelry, special events, health and beauty were all double digits. We also saw high single-digit growth in majors, in tires and small appliances. And I didn't mention apparel during the call earlier, but that's also showing really strong improvement in sales momentum and comp growth as well. So I think our perspective on non-foods is that we think our teams are doing a really good job in delivering great value for the member, and we think we have a clear path to continue to grow our market share in non-foods by continuing to deliver on that promise to our members. And that's really where our focus is.
Okay, thank you. Happy holidays.
Happy you too. Thank you.
And our next question comes from the line of Scot Ciccarelli with Truist Securities. Your line is open.
Good afternoon, guys. Thanks for the time. I guess another question on warehouse expansion. What are your latest thoughts around long-term warehouse potential, both in the U.S. and in total? And then second, I think all of the lower price examples you gave were Kirkland products. So are most of your heaviest price investments on your private brand products? Thanks.
Yeah, on the first part of the question, Scott, I think Ron briefly alluded to it earlier as well. We tend to look 5 to 10 years out in terms of our real estate plans, and we would still see a really good roadmap for 30 plus warehouses a year is the goal that we have. At least achieving 30 new warehouses a year is the goal that we set for ourselves. And when we look at that 5 to 10 year plan, we see opportunities for growth in all the markets and geographies that we're operating in today. So generally speaking, we're expecting around half, maybe slightly over half, to be in the US, and then just around half to slightly under a half to be in the rest of the markets that we operate in. So think of that being Canada, Mexico, Europe, Asia, Australia, across those different markets. And I wouldn't say it's one specific geography. It's really fairly well spread across those markets to continue to build our presence in each of those different geographies. On the second part of your question around Kirkland Signature, I think it's more a reflection of, we tend to have obviously a very strong understanding of the cost involved in those items, and we want to be always the first to lower prices for our members and the last to increase them. And so buyers and our category managers who look at those items whenever we see an opportunity either to work with our partners or to find ways to buy more effectively, we want to be looking for those opportunities. So in most of those cases, that's us really working very closely with our suppliers to look at what we're seeing in the cost base and working creatively to either increase our buying globally so that we can improve our economies of scale, or looking at ways to operate more efficiently without ever compromising on the quality of the item. And those would be all great examples of where our teams really looked and found opportunities to bring down the price and increase the value for our members.
Thank you, and happy holidays.
Happy holidays.
Thanks, you too.
And our next question comes from the line of David Bellinger with Mizuho. Your line is open.
Hey, everyone. Thanks for the question. Regarding the personalization efforts, those seem to be working pretty well early on. How much further does that have to roll out? Is it hitting every member at this point? And any specific examples you can share on the conversion or the sales uplift that some of these personalization changes are helping with today?
Yeah, we have been pleased, as you heard Ron mention in the comments, around the progress that we made on personalization, where we really are now starting to use our membership data to look for ways, how can we really make the experience better for the member? How do we improve the convenience for them? How do we help them see the most relevant messages that help them get to the best value from Costco? I still think there's plenty of roadmap and opportunity for us to continue to improve. First of all, we're relatively early on the journey, so we're learning what do our members really like, where are the places we can fine tune and improve those communications and the places in which they show up. I still think there are a number of elements on our roadmap where we still see parts of the experience that our members have that we can make that personalization more relevant, whether that's the items and the order in which they see them on things like the MVM, or whether it's the way in which we deliver email communication to our members. So we still see a really strong runway to continue to improve. We don't really talk about metrics. I think our focus is much more on how we're driving overall member experience and top line sales. So some of these things are intended to improve the way the members are able to engage in our warehouses or the way they're able to buy online. So we tend to look at it more of, is it driving an improvement in member engagement, and is that helping drive our digital sales, which we continue to expect to grow at a faster pace overall than our warehouse business, and is it driving more member engagement overall? And we've been really pleased with the results so far on that journey.
Great, thank you.
And our next question comes from the line of Kelly Bania with BMO. Your line is open.
Hi, thanks for taking our question. Was hoping to go back to the topic of renewal rates a little bit. I know you don't prefer to guide or forecast, but I think you did say, Gary, we might see still a decline in the renewal rates the next few quarters. So I was just wondering if that's a little bit of conservatism, because it sounds like you are having some success on mitigating that dynamic. Just wondering if you could comment on that. But also, if you were to pull out that cohort of those younger members, would the membership rates be improving, excluding that, or can you share any, of a deeper dive on that renewal rate dynamic?
Sure. Yeah, it really Kelly, the impact that we've been talking about really is attributable to this phenomena that I've mentioned on the call earlier around, as we add in, and it sounds like you fully understand the sort of concept of what's happening with the membership base overall, that as we've brought more of these digitally signed up members who are generally younger, that just they do renew at a lower rate. So really the impact that we've talked about the last few quarters on renewal rate is a function of those members moving into the renewal rate overall. So that really is what's driving what has driven the slight decline that we've seen over recent quarters. To your point, our goal obviously is to arrest that decline as quickly as possible, and certainly we're encouraged by what we saw this last quarter with the improvements that we made through the more targeted and relevant communication to members who we know have signed up through that channel. So we're very encouraged by what we've seen so far. Our goal is to stop that decline and to reverse that decline as quickly as we possibly can. As we're only one quarter into the change that we made, we wanted to flag that, of course, there's still work to be done there. And, we are still at a lower renewal rate on digital signups than we are on warehouse signups. And so our expectation of ourselves is to close that gap as quickly as possible. But we want to be transparent in all that we share, that there's still work for us to do. And there is a possibility the next couple of quarters could still show a slight decline because of the factors that I'd mentioned in prior calls.
Super helpful. Thank you.
Thanks, Kelly.
And our final question comes from the line of Spencer Hanus with Wolfe Research. Your line is open.
Good evening. Thanks for the question. Just curious if you could talk about the cadence of comps you saw through November and then into December and how that's informing how the consumer is holding up heading into the holiday from your vantage point. And then are you seeing any trade down or divergence in performance by customer cohort that is changing how you guys are buying?
Yeah, I think, thanks for the question. I think, we don't obviously get into talking about specifically our current quarter because we report our sales on a monthly basis. But, overall, I would say we're seeing relative consistency in how our members are shopping. I mentioned it earlier that we have seen month to month some, I call it bumpiness, if you like, in the sales, but most of that's been attributable to whether it's cycling, port strikes, or consumer uncertainty one month with tariffs, and then the sales come back the next month. And if we look at the last 6 months or so, outside of the two things that I mentioned around, we've seen continued strong growth in non-foods and market share gains, but we have seen a deceleration in non-foods. And I think that that's really been offset when you look at the total comps by the benefit we've seen from extended operating hours. But net, really in that sort of 6.5% range when you look at the last 2 quarters over the last 7 months, really, outside of a couple of months being one slightly above and one slightly below that 6 to 7% growth range. And those months are right next to each other. So when you average out the two, they came in at 6.5 as well. We've been really in that's a consistent range. So nothing that we call out that we're seeing as a change other than the 2 factors I just mentioned in terms of member behavior and the way in which we believe our value is resonating with them.
Okay, got it.
And ladies and gentlemen, that concludes our question and answer session and today's call. We thank you for your participation, and you may now disconnect.
All right, guys, there we have it. There's the earnings call for the day. Get out of here. Get out of here, call. All right, so I'll step back. I'll stepping back from the numbers. I appreciate you guys for watching the call with me. I'm gonna go over some of the notes I have written here on the side of my screen, and I think that this quarter really reinforces how consistently strong Costco's business model is. Even without any major surprises or headline announcements, I think that the company delivered exactly what long-term shareholders are looking for, and that's steady revenue growth, rising earnings, and strong membership income. Well, while we see the comps are across all the categories that are important, we saw increasing growth. Later, Joseph. That predictable performance, though, is Costco's superpower. And what stood out most, in my opinion, is how resilient the demand remains. And traffic is still very strong in both the digital and the omni-channel sales are both accelerating. And customers continue renewing memberships at extremely high rates. When you run a business with a model where most of your profit comes from memberships rather than high margins on products, a quarter like this is exactly what you want, and it shows that the loyalty is holding. Members are still spending a lot of money, and Costco is continuing to take the market share from the traditional retailers we've seen inside the business. And not only this, I want to point out, if you've taken a look at the balance sheet today, it is showing a lot of strong things as well. We see Costco is sitting on a lot of cash. Where is it? Cash and cash equivalents. $16 billion in cash and cash equivalents. The traffic is still very strong for the company. In both the digital and everything else. And as we can see, they've been managing inventory well and operating with very little leverage, which I think can be crucial in the next leg up for this stock. And I think that's why this stock can continue to grow. This financial position that the company has gives them the ability to expand internationally, which I think has been one of the most crucial things inside of this company. Having the cash on hand is something that many companies struggle with, especially with how high the expenses are inside of businesses like this. Having this is going to allow them the stability to open warehouses and consider even giving out that special dividend, which we were talking about inside the chat a little bit earlier in the stream, because I think that this dividend will only make sense once they have more cash, and this cash stockpile is already pretty high, which is why I think it may come in the future. True, good point on renewals being important. People love Costco, and its growth will increase as new warehouses open up. Some big cities don't have Costco's yet. Exactly, I agree completely. And as they even showed it here. Where was it with the warehouse expansion? It's some of the biggest expansion we've seen in years, and they are continuing to push forward and continuing to make the company greater every day, which is one of the main things I think is different from every other company. Obviously, we wanted to see them announce something about a split or additional dividends today, but historically, Costco only makes these moves when the board feels conditions are perfect, and I think that the conditions are obviously very good, but they're not perfect, which is one thing I wanted to point out. And I think that the stock is doing very well, and obviously the regular dividend still is solid. And what is the dividend right now? Dividend for Costco. So if it's 900, it's about a 0.59 dividend yield, $1.30 quarterly yield. It's obviously not great. It's nothing I would write home about. But I think in the future we will see more special dividends. I think they will reinvest inside of the investors more in the future. And from a bigger picture perspective, Costco is proving once again that it doesn't need explosive growth to justify its valuation. I mean, a lot of people, I saw someone in the chat talking about, what about the valuation of the company? The valuation of the company will only seem high if you don't understand how big of a business this is and how resilient they are to any type of economic downturn, any type of tariffs. The company has done great no matter all this thing, and they win through this consistency. They have customer loyalty, the scaling advantage, because they have their own business, they have their own products, they have all this different stuff. And one of the most reliable recurring revenues is obviously just this membership model, and I think that it will continue to boost the stock in the future. And this quarter didn't change the long-term story at all. So if you were investing a month ago, let's say you were investing a year ago, there's no reason why you would sell today. There's no reason why I would be selling on this news. And if anything, this earnings has strengthened the company. And if you're bullish on Costco in the future, today's earnings really should give you a lot of confidence, because the company continues to execute quietly and efficiently in a way that sets them up for sustainable growth year after year. It's not the loudest stock on the market, but it's one of the most dependable stocks, and I think that the returns will continue to be good on this one just because of how well they have positioned themselves. And I think that some of the other points that they pointed to was this digital growth. This digital growth will be absolutely crucial to watch, especially as we've seen, this is still very early for a company at this size. Costco's online sales have grown sharply, 20.5% year over year. And this is going to be one of the biggest winners in the shift, as we've seen, because Costco has years of runway for digital expansion. And every dollar that moves online is incremental growth on top of strong in-store traffic. So obviously everyone looks at the in-store traffic, the expansion we have there, which is going to be crucial. But once we have more momentum online, I think this could be another huge part of the company that will go under the radar. And as we talked about the memberships, but memberships are crucial with this business model, and it's one of the most bullish under the radar trends in this stock is that the membership fee income is growing faster as they continue to raise the price of it. They continue to grow the membership base at a steady level. That means that Costco is strengthening the most profitable part of his business even more quickly than its retail footprint. And as the executive member tier right here, as we can see on the screen, oh, you can't really see it right here, the executive member tier, upgrades rise, margins expand almost automatically. And these members literally pay roughly double the standard membership fee and spend significantly more as well per visit, because usually it's companies. So Costco continues increasing the share of total members in the executive tier, which is going to just boost their reoccurring revenue, their average reoccurring revenue, their lifetime customer profit, and annual profit. So this is a powerful margin lever that will keep them compounding in the future. And I think another thing that is that they didn't talk about on the call or anything, but I think that inflation realistically helps Costco more than it hurts it, because Costco's buying power and supplier relationships allow it to hold prices or delay price increases longer than its competitors. So other the competitors will have to increase their prices while Costco is able to keep it steady, especially since they have their own product line, as they were talking about here, the Kirkland their own KS products. These are absolutely crucial because in inflationary environments, in times of inflation, this makes Costco even more attractive and drives higher traffic, and it reinforces the perception that Costco is the best value, which is only going to continue to strengthen their long-term loyalty, which is the base model is the membership. So this is crucial, and I think inflation is one of the few stocks where I'm not worried about inflations. I'm not worried about any type of issues in the economy, because they do well no matter what. And as we can see here, the international growth is just getting started. The markets like China, Japan, Australia, Spain, and even the UK continue to show high traffic, high membership conversion, and strong renewal rates, which each international warehouse becomes a long-term cash flow engine. And as we know, having each one is just its data set. So think about AI. So like if we're talking about an AI data set, so each piece of data that the AI has allows it to grow faster. So the more expansion we see into this international market, the more we will see in the future. And I think that the operational efficiency is continuing to improve for Costco, and they've talked about remodeling some of the stores, which I think is going to be crucial. I wish they talked about more what they were planning to do exactly, because I think that the lower SKU count and this lower energy uses will allow them to simplify the layout, and scale allows them to maintain one of the lowest cost structures in retail, which could allow them to gain a lot of money in huge dollar impacts. Because let's think about it if we take a step back. So if we are able to save, let's say 2% on the energy that the building uses, that doesn't sound like a lot. Now let's say we're doing it across every single warehouse that we have. How many is it? It's a couple hundred to thousands now. And so each one of these units is saving this percentage, and it is continuing to save month on month. And these renewed remodeling projects are going to be crucial in driving their future growth. And I think, as we've seen, they are one of the few retailers with real pricing powers, because they have the ability to raise membership fees whenever they need. They have done it in the last couple quarters, and historically, even membership fee hikes are absorbed almost without zero impact on the stock. And this is extremely rare inside of the retail market, as we've seen in history. So let me see the stock price here. It is sitting at $877 after the call. I don't know what I was expecting, to be honest. I think it's not a bad earnings though. Everything I'm looking at, it's not a bad earnings. There's nothing that points to anything that you should be worried about if you're holding it. If you're looking to buy, obviously do your own research, do your own due diligence. I don't think it's a bad investment though, and I would definitely not be selling after this earnings, because the cash flow is just supporting future specials, and they don't need to take on debt to reward the shareholders in the future, which is something that a lot of companies have been doing in the past. They generate enough free cash flow to continue their expansion internationally. They have enough cash to invest in the new warehouses, these remodels I was talking about. They have the ability to maintain a strong cash reserve and pay these special dividends every few years, which they did last year, they did in 2020, and we may see one coming up here soon, because the stock is continuing to grow at steady rates. And I think there's a lot of wins here on the market. So if anyone has any questions, I'd love to answer them. I see there's like 15 people here, so if there's any questions, I'll answer them real quick. And if not, I will probably just head out here in a couple minutes. I appreciate you guys for watching the call with me. It was a good call. I think they answered almost every question I had on my mind, except for the dividend or the split question. But I'm sure they'll talk about it in investor relations. So if anyone has any questions at all, please drop them down right now. I'd love to answer them. And other than that, I just want to really point out how Costco pretty much wins in every economic environment. So whether the economy is weak, customers will go to Costco for savings. In a strong economy, customers are going to buy more discretionary and premium items that they benefit from as well. And even in a mixed in economy, which I would call right now, we're in the kind of a mixed economy. Costco is continuing to gain market share due to its trust and value, and also its social media presence. I've seen a lot of people talk about the social media presence of Costco, and it is one that goes understated. And there are very few business models that are this resilient across multiple different cycles, multiple different businesses. And I think that it is crucial to watch in the future as we see the stock continue to grow over the next coming years. And obviously, it already has had a great last couple years. Let's go to the 5-year chart, 134%, and then the all-time chart though. This is one of the crazier ones. You look at this chart and your jaw drops to the ground almost. 1,800%. I mean, that's from 2000 though. I think it was something like for the last 5 years it was 700%, or was it? It might have been the last 10 years. I probably read it wrong. I saw it on Instagram this morning when I was going through some finance pages I like to follow. But yeah, that's pretty much all I have for you guys today. I appreciate you guys hanging out. I don't see any questions in the chat. I kind of gave as much as I thought on the stock. I gave as many crucial points on the stock as I could really come to mind off the top of my head. There's obviously probably something I missed. I'm probably missing there's probably something I missed. I don't know. So if anyone has any questions, drop them in the comments down below. I'll obviously give you guys a good answer. I always like to talk with you guys. That's why I like to do the streams. I like to make videos. It's to talk with other people about stocks and be able to get your guys' input. But if that's it for the day, I'll probably head out here in just about a minute. And yeah. Excuse me. Sorry, guys. All right. Let me see. If a company like this with a high price of 877, what would you guess a stock split would make the price? I'm going to assume that Costco, if they ever choose to split the stock, the most realistic scenario is probably going to be a 2-for-1 stock split, because it's the most common split for large mega cap companies like this, which are very big companies. And Costco has historically used 2-to-1 splits, and companies in this price range of 800 to 1,000 almost always start with the 2-to-1. So before considering any larger, so that would make the stock price, I think, $438 a share, and that brings the stock into a very comfortable range for both institutions and retail to be buying. Costco is suing the United States government to challenge the legality of tariffs and to make sure it can get refunds if the tariffs are judged illegally. I did see that, and I think it is very important, because this lawsuit, it made headlines for like a couple days and then it went under the rug. But if this goes through, it really will protect Costco's margins, because tariffs directly raise Costco's cost of goods on imported items. And what the biggest value proposition on Costco is how good their value is. I mean, by challenging the tariffs, Costco is trying to reduce their future cost pressure, potentially recovering millions that they already have paid. And it may be a huge net bonus on the stock in the next coming months once we see this come to fruition. And I think in the future, it's also a proactive risk management move, because obviously we don't know what Trump is going to do next week. We don't know what he's going to do next month. But Costco isn't waiting for these policy changes to happen. They're not waiting for Trump to wake up on the wrong side of the bed and change his mind on a different country. So the lawsuit is essentially Costco saying, if these tariffs get overturned later, we want our refunds guaranteed. We want our money. We want to provide shareholders with good returns in the future. So a lot of large importers do this as a defensive financial strategy, and Costco is just being early with it and very aggressive. So I think that a refund would be a pure boost for the stock and the company in general, because the refunds will go straight into net income, and this will cause the cash flow to improve, obviously, and we'll see a lot of short-term profitability from this. Even though it's not central or the long-term story, it will be materially positive if they are able to succeed inside of this lawsuit, which I think it could happen, because it really it wasn't their fault, these tariffs, and they have infected the business a lot over the last couple of years. And Costco already runs one of the best retail operations in the world. So pushing back on tariffs reinforces their commitment to low prices, disciplined cost control, and finding efficiency where it is possible. So this is why members trust the band. Costco is continuing to fight for low prices, even behind the scenes, even when we think they're not. They are continuing to fight for the company, continuing to fight for the shareholders. So I think that if the company wins, it could be huge for the margins, huge for the cash, and just for the company in general, especially as a shareholder, it could be big. But if they don't win, I mean, let's think about it realistically. Even if they don't win this lawsuit, what really happens? Nothing really changes. Nothing changes. That's the main point. And Costco continues to build its business as usual. So the risk is very low on this lawsuit, and the upside could be very meaningful in the next coming months. So that is a good question, a good chat. I appreciate both of your guys' questions here. That was very good question. I saw that headline a couple weeks ago, and I took it to my head, and I was like, oh, this is going to be big news in a couple months. But I wasn't sure when it would come to fruition. So timing of the Supreme Court's decision. I think they heard the argument a couple, like, last month. So there's no official release date, I'm pretty sure. But a lot of people are expecting the issue to come out in the mid next year, potentially as early as like before the summer. But I think that the mid 2026 window is most likely, because Supreme Court cases often come out several months after the original argument, especially major ones like this. And I think that Costco isn't waiting for the Supreme Court to decide before they start acting. It's already filed its own lawsuit inside the Court of International Trade, I'm pretty sure I saw a couple days ago. And this can ensure it still gets refunds if the tariffs are eventually struck down. So I think that the Supreme Court's ruling could determine the lawfulness of tariffs, and I think it will directly allow refunds to Costco and allow them to grow in the future. So I am expecting the decision to come out mid 2026. If that was the question there, I'm pretty sure that's what you meant by that. If you meant something else, let me know. But it could be as early as next month. It could be, but I'm thinking it'll probably be somewhere before the start of summer 2026, when we start to see the tariffs, the issue with the Supreme Court come to light. That's mainly when I am thinking it will come. But yeah, I think that's pretty much it. That was a great earnings. I'm going to leave this video up, well, this live stream up as a video, so that you can come back, rewatch it, or if you're someone watching this as a video, thank you guys for watching as well. Sometimes people watch it after the fact, which is always nice to see. I think I've gone over pretty much everything here, and I don't see any more comments, any more questions in the chat. So I will be wrapping it up here in just about I'll give it one more minute, just because I really like to talk with you guys about the stocks and stuff, and I think we've gotten some good questions here in this last couple minutes. So anything else that comes to mind, feel free to shoot. It could be the craziest thing Craziest question. It's like the teacher used to say in school where you're like, no, there's no stupid questions. There actually is no stupid questions. I always like to talk about anything you guys have on your mind. Any stocks you guys want to check out. Anything. It doesn't even have to be Costco. It could be anything really. I'll check it out right now. Because I have some time before I gotta go eat dinner. I'm actually pretty excited for dinner today. But you guys probably don't care. I don't know. I just started talking about my dinner now. That's the end of the show, guys. Now it's time to talk about what I'm eating for dinner. I'm just joking. But yeah, I don't see any questions. I'll give it a little bit more though, because I don't lose anything by waiting. I mean, the stock isn't moving after hours too much, which it's not a bad thing. It's not a great thing, obviously, either. There's nothing really materially there. Um, I think this is still a long-term story. You're not investing in the short term, and a lot of people that put shorts, they're gonna get burned tomorrow morning once this market opens up, and the stock is seen on the news and everything. The stock people are gonna get burned very hard on the shorts, on the short side of things, because the stock did pretty well, all things considered, and I think that their growth engine is still very strong for the future, and the long term story is very much intact, which I think is a crucial thing in the future here. And I think, yeah, it's one of those stocks where I'm not personally going to go out of my way and buy it right now, but I am definitely, if I had shares, I would hold, and I would look for an entry here in the $800 range somewhere. So, what's for dinner? See, Jim, you're my friend, man. For dinner, we're having penne vodka. If you've ever had it, it's basically just pasta with this like vodka sauce. I don't know how to explain it. It's just good stuff. Penne vodka, and then I like to cut up like chicken cutlets, and I just put it in there. Oh man, I I would give I'd give away everything for that, and I'm having it tonight. So I'm very excited. I don't want it to get cold, so I'm probably gonna get off here in any second. What are you guys having for dinner though, Jim? What are you having for dinner, man? I don't know what time it is because where I'm at, it's 6 o'clock right now, so it's already pretty much dinner time. But I don't know where everyone else is, because I know if you're living on the West Coast, it's still 3 o'clock. So let me see this. But yeah, I think the stock is doing well. It hasn't really moved. I don't know if that my Robinhood account just glitched, or is it no? The stock's just not moving that much. Okay. Yeah, still pretty good. Everything considered. Um, Buffalo pizza. See, that's another good one. I used to Buffalo chicken pizza. I used to work at a pizza shop for probably 4 years. Uh, when I was first starting out, and the buffalo chicken's probably one of my favorites. Buffalo chicken's good. I like the chicken bacon ranch. Obviously, you got to go for that. If a company makes good meatballs, the meatballs are good. I don't really like veggies too much unless it's like fresh mushrooms or like peppers. Onions are good, obviously, in moderation. Garlic's a must most of the time. And yeah, that sounds like a good dinner though. I wish I had pizza right now. Now you got my wait. What day? It's Friday, right? No, it's Thursday. I'll have pizza tomorrow then, because Fridays are pizza days. So yeah, that's pretty much it for me today. I appreciate you guys for hanging out. I hope everyone enjoyed the call. Everyone enjoyed the analysis, whatever you want to call whatever I do. I appreciate you guys for being here. I hope you guys have a safe rest of your night and a good holidays. And other than that, I hope you guys take care.